Today, I want to talk about one of the most controversial topics in finance, and that would be, should you buy a home or should you rent and invest the savings from renting instead of owning in the stock market? You know, when I first heard this, I thought, that sounds like a bad idea, but I didn't want to be closed-minded, so I dug deep in. I'll tell you what I found out. Here's a study done in 2023 that shows the cost to buy compared to the cost of rent over time. And I think this is kind of what sparked this whole debate. Now, I would imagine that the cost to buy has come down a little bit as mortgage rates have decreased from that time period till now, but it's still more expensive overall to own a home than it is to rent. But the reason I bring this up is that I want to push back on this idea that the average person should listen to this kind of advice. There are a multitude of factors to consider. Factor number 1, location. Which part of the U.S. are you considering to buy or rent in? Is it in a large metro like Chicago, Seattle, somewhere in Florida? Or is it somewhere in a rural area? When I asked AI about the historical context of something like this, when has this strategy worked to actually rent and then invest the savings that you don't have in owning a home and the maintenance and the upkeep and the insurance and taxes and invest that into the stock market? When has this kind of strategy actually worked? Interestingly enough, it gave me 2 specific time periods where this performed very well. It referenced Seattle and San Francisco as markets where this was actually successful, and it referenced time periods such as the 80s where stock market valuations were historically low and home prices were considered unaffordable, interest rates were high. Going back to our chart for easy visualization of this, as you can see in the 80s, the cost to buy was relatively high compared to that of renting. Then let's take the Shiller PE ratio, which looks at the total stock market valuation at certain points in time, which shows that in the 80s, the valuations were at the second lowest they've been in 150 years. And so where are we today with stock valuations? Well, that would be the second highest valuation we've ever had since the tech bubble in the early 2000s. You see, we just happen to be in that specific point in time in financial history where both housing and stocks are very highly priced. So if you're thinking about doing this strategy, know your location, know your long-term goals, and then know that there is risk. Over 150 years of data shows that when the CAPE ratio exceeds 30, that the annualized return for the total stock market barely keeps up with inflation. Guys, and this is for 10 years. This actually occurred from the year 2000 to 2010.